Now I have taught you about the liquidity grab strategy, right? The liquidity, I explained the liquidity, where it is and how you can trade off it. So right over here, there are some good examples of those strategy, okay, which happened this week and now on Tuesday, Thursday, and this was Monday. Now if you look at over here, yesterday, this is what happened on euro dollar. The price was making higher, the lower highs and lower lows like this, okay. It made a lower low and then it gave a market structure shift. Everybody can see that it made a higher low and then it made a higher high, and then market ends over here, and then the Asian session starts, and then right at the New York session or at the London session kill zone, price goes below of this low, right? So now all the traders, like those who are trading supply and demand zones and all the liquidity, they will be doing like this, right? Because they can see that this was the extreme point from where price moved towards the upside. So now what they will do, they will place their buy limit just starting off this zone right over here, right? But they will not, and they will put their stop loss just a little bit below of this structure. But what we do, as I explained it in my previous videos, that we will just take a buy a little bit below of that demand zone, okay? And if you can find a round psychological level below the demand zone like this, you can take a buy right over here. And this was the trade, and there are lots of examples. And if you're trading on 15-minute time frame, you have to wait for like overnight. You have to hold trades overnight also sometimes, because if you're trading 15-minute time frame. But if you want to do scalp, okay, you can do scalping also with this strategy. And if you look at carefully, we can see that for scalpers, okay, they can see that price was making higher highs and higher lows like this, higher low. It's 5-minute time frame, okay, so you can do scalp on this, higher high, higher low, and then another higher high right over here. And then it gave us this. And now the average trader, who is very good at finding higher highs and higher lows, he will think that this is a market structure shift, right? And he will think that this is a market structure shift, and he will look for sales from this candle or from this candle, and he will think that this is a supply zone. But we all know that what's below this low and what's below this low is a sell side liquidity, right? So you can take just a buy from the fair value gap, which is below the sell side liquidity like this, okay. And now you can put your buy right over here and you can take a what you call the 7 pip stop loss something, and you can target for straight 1:2 like this. So the thing which I'm trying to say, that this thing works for scalpers also, this thing works for short-term traders also, day traders also, and you can do swing trading also with this. For swing trading, this is the example. This is like a 1H time frame chart, okay. And if you want to hold it, you can hold it for days. Like you can see in this chart that there was these two relative equal highs right over here, and price was making higher high like this and higher low, and this what happens. And then you can see the move, because this all candles, can you see that these all candles are bullish candles, just one bearish candle right over here, okay, and like these all of them are bullish candles. So this is called a manipulation, okay. When you see like this type of candles, like bullish candles going into the buy side liquidity, so it means that the manipulation is going on, because the algorithm, like the people, right, the people will look at this as a resistance, okay, and they will look this low as a resistance, right, and they will look at this one as support, and it will go above this resistance, and they will take a sell at this resistance, but we have to take a sell a little bit above of that, okay. And this is also the example right over here. Price made a higher high, then this was a higher low, this was a higher high, and this was a higher low, and now people are expecting that price will go up. But what happens, price comes down, takes that low, and then it goes. And this is what happens if you're trading a higher time frame. You have to hold trades overnight, and you have to wait for 2 days or 3 days, okay. This was the pound yen trade. This was also making that higher highs and high lows. So the thing is that you have to do the opposite of the traders. Like the thing is that you have to look in a perspective of a supply and demand, support and resistance, and trend line trader, okay. Because if you look in their way, you will be easily find out supply and demand zones, and you will easily find out support and resistance. And if you can find out supply and demand zone, and if you can find out support and resistance, you can know that where are the stop losses of those traders, right? Because you will get to know that, okay, if this is a demand zone, the stop loss will be right over here, or if this is a supply zone, the stop loss will be over here. So only thing which I'm telling you to do is that where the stop loss is, where you will put the stop loss is, just put your buy limit or sell limit right over there, okay, just a little bit above of this resistance like this, and then take like a 10 points or 20 points stop loss like this, and then target 1:2 or 3 like this, okay. So this was the trade, and this is a pound GBP USD. Nothing. This one also like nothing fresh. It was making higher highs and high lows. This one, okay, this is GBP JPY. Now look carefully. You can see a trend line formation over here, okay. If you guys can see this, it's making a kind of trend line. Yes or no? Like you guys only think, is look at this. This was making a trend line. Price gave a reflection from once, twice, thrice. It made so many reflections, right? So now when they see this breakout of this trend line, okay, they will look for sales when it will go and retest this trend line, right? Or they would have looked for buy right over here. But what happens? It goes down, takes this two relative equal lows, and then what happens? It keeps on going and takes these two relative equal highs, and then it goes and takes this high also, this old high, okay? So now you have to look for a perspective, because see, this is a big trend line, like it's going on from here, I guess. It's going on from here, okay? So the thing is that we have to do the opposite. As I told you, the trend line trader, he will see that this is a trend line breakout, and he will sell. okay, but we have to do the opposite of this. So I hope you guys understood this one. So I should go on next. USD CAD right over here. Now look closely, okay? Can you guys see something over here? It was making a supply zone, right? Price give the breakout of the supply zone. But what I told you, you have to just take a sell a little bit above of the supply zone like this, and you have to put like 20 pips or 10 pips stop loss or 15 pips stop loss, and then you can target the lows, okay? So now what you can do is, I should show you the gold also. This one, the gold trade, okay? So what happens? Price was making high highs and high lows. Price made this high low, and the price made a breakout structure from this, and then now every trader, they will be looking for buys at this level, right, at this zone over here, and price goes till over there, okay? It shows a rejection at this candle right over here, at this candle also, at this candle also, because it's like a type of doji candle and all of it. So, and what happens after that? Price give a breakout. Now people will be looking for breakout trades, okay? But what will happen? It will happen opposite, and it will go with the order flow, okay? What's the order flow? You know about the order flow from the higher time frame perspective, okay? And I will teach about that also in next videos. But this is what you have to do, okay? You can see that the price goes down and takes the low. You have to just take a buy a little bit below of this support, okay? Little bit below, and you can put like a 30 point stop loss, 3 point stop loss, and then you can target this relative equal highs. So this is what I'm trying to tell you about that. And I took a loss also, I should say that I took a loss, and I missed this trade, okay? And on what's this, on Tuesday I missed this trade, and I placed my buy sell limit, okay, little bit above of this level right over here, okay? But I didn't got a tap, and then I saw that price has already gone above of this level, right? So that's why I missed this trade. But I missed this trade, and I didn't get any entry afterwards. But I tried to enter, and I forced myself to take an entry on a Nasdaq, and it was a loss. You can see this relative equal highs, right? I took a sell little bit above of this, and on 5 minute time frame. So I saw this two relative equal highs, and I saw this that this is a higher low, right? So I thought like there will be a sell side liquidity, so I placed my sell limit right over here, a little bit above of this, like this, and this what happened, okay? I know it's late, it's like market will close in 20 minutes, but there are lots of moves in last 20 minutes or last 10 minutes, okay? So that's why I trade this time period, and this what happened. And I did, and it was so fast that I didn't do break even and all of that, and it was straight loss, okay? But it doesn't matter, loss is the part of the game. So I hope you guys understood that what I am telling about. I'm saying that you should be with a good supply and demand, okay? You should know what supply and demand, where the supply and demand trader puts stop loss, where the support and resistance player traders put stop loss, where the trend line traders, and all of them, okay, all of them, where they put their stop loss and where they take the entry. You should know about it, because if you can get to know about that where are their stop losses, it means that you are successful in getting a liquidity pool, okay? You are successful to find out liquidity if you are able to find out their stop losses, okay? And the liquidity is like a fuel in the market, okay? If there is no liquidity in the market, the market will not move, right? The market will keep on, it will not move, and it will not give you entry. There's liquidity, that's why market is going up or going down, okay? There are like people are losing and people are winning at the same time in this market for millions of time, okay? So that's why liquidity is very much important. And if you can know that where is the liquidity, okay, you will be a very good trader. Because if you know that where is the liquidity sitting, because if you want to win, okay, there's somebody in this world have to lose that trade, okay? But you have to, if you want to win the trade, there's somebody have to lose the trade in this world. So that's why liquidity plays like that. Because if you are selling like just right over here, if you go on 15-minute time frame, if you are buying right over here, little below, okay, over here, so some people are selling right over here by seeing the breakout, took their stop losses like this, and this is what happens. So I hope you guys understood that what's liquidity. And if you guys have any questions, just let me know in the comment section, and you can DM me on Discord or Instagram, okay? So until next time, wish you good luck and be safe.